Mhm.
And let's go. I remember very well the mesmerizing price prophecies in November 2021. I think it was Bitcoin should be around 200,000 euros first quarter 2022. And if I remember it right, Ethereum was predicted to hit about 20,000 euros also in quarter one 2022. And when I look on the markets today, I think we are nowhere close to that situation. The question I have is there still some room for cryptocurrency, digital assets to grow, or is it all over right now? And I'm happy to have in this podcast recording today Astrid Woollard and Christian Niedermüller from, I hope I spelled the name right, Smape Capital. Welcome to the show.
Thank you, Christian. Thanks for having us.
Yeah, thanks. Thanks for having us. Yeah.
Good to see you. Let's start with the name of your company, Smape Capital. Did I spell it right? And what does it mean?
Yes, you spell it correctly, right? It means SMAPE stands for Smart Perspectives as our first fund, Smart Perspectives 1. And should mean that we are aiming to give new perspectives and smarter perspectives on the whole token economy. And that's why we're here. That's what we stand for. A new innovative way to look at the new ecosystem that is arising here.
What's the focus of your fund?
So basically, we invest in pre-seed, seed stage ventures in the blockchain ecosystem. So we are a token first fund. So we're predominantly interested in really the token instrument. Having said that, there are some jurisdictions where for regulatory reasons we would need to go into equity investments to then get the token. But in general, this is sort of the area that we're looking at. And in terms of infrastructures, we are very agnostic. So it could be any infrastructure that is out there, because we believe that every infrastructure, may be Ethereum or Polkadot or Cosmos or whatever, will have their own prime use cases where they will work best. And then they need to interact with each other. So this almost leads to the next kind of sector we're looking at, or area, which is sort of interoperability and bridging solutions between these infrastructures to also make this vision of Web3 reality. But we have also some other interesting sectors that we also see coming through for our deal flow, for example, decentralized science, or also the intersection of hardware and IoT. There's still a lot of opportunities also in decentralized finance and also the NFT market, whereas the sort of applications of for arts and collectibles has been hyped a lot. There's still a lot of room for other applications also in the gaming sector. We've also done recent investment in that area, but also sort of like fractionalized ownership and the like. So also in terms of sectors, we're quite broad.
That's good to hear. So you're the absolutely right experts in the room to talk about digital assets, digital economy. In January, ARK Fund published their latest Big Ideas report, and the first time they came out with price predictions with a timestamp. Cathie Wood estimates that Bitcoin could be $1.36 million by 2030. And her predictions for Ethereum is 75 to 80x by 2030. When I translate it into the price, I think we come somewhere between 150 to 200,000. The question I have to you too is, where did all this hype come from? I mean, cryptocurrency, digital assets are relatively new. Can you give a little bit of an overview of the history of digital assets?
Yeah, basically, interestingly, it's not as new as people might want to think, or a blockchain concept as such. It's actually started as an academic concept in the 80s. So David Chom actually completed his PhD thesis as first academic in this field. And from then on, further developments took place until sort of Bitcoin that was created by this pseudonymous developer Satoshi Nakamoto was put into life as first commercial application, you can say, of this technology.
Astrid, do you know who Satoshi is? Do you have a guess? I think this is one of the mysteries around that.
I hear a lot of rumors. But no, I don't know. No, to be honest, no. But I feel like this will always remain a mystery, and if it's really one person or a group of people and the like. But I heard a lot of interesting rumors around that. Yeah.
What was the novelty? I think it was 2008-9 when they published the paper. What was the novelty in there?
Well, basically that you would have this decentralized payment system, and that you have sort of this token, this Bitcoin, that you can use also to transact between people in a peer-to-peer fashion without any intermediaries. So that was really the novelty there. And that was already, you know, a great achievement that we could do that. But it's sort of the real interesting part came when Ethereum actually came to life in around 2014-15, around that time, when smart contracts actually were introduced on this sort of chain of blocks, where you could then sort of run your own programs on each block, and which gave rise to, again, yet more business models. And sort of then we could really see an explosion of decentralized applications being built on this network. And soon from then on came then the question, well, how should all these chains then sort of interact with each other? And then there were several efforts to build interoperability protocols. So first one was actually Cosmos that launched in 2016, I believe. And after that, we had other infrastructures like Avalanche and Polkadot, which try to tackle this sort of interoperability between chains. It's still within their own kind of hubs, so we're still a bit far away from having actually transaction between for sort of different infrastructures. And depending on, you know, what infrastructure you have and how it's set up, it's more or less easy. But that's basically where we are these days. Yeah.
There is also this this term next generation tokens that I heard lately. What do you see as the next generation token? I mean, there was Bitcoin, Ethereum, and what's the next wave that's coming?
I mean, I think that, as I said, not quite sure if one can say next generation tokens, but maybe next generation or next sort of innovations in this field is sort of this interoperability between those so-called interoperability hubs, so bridges, and making sure that we can actually not only transact tokens, but actually also data between these. And I mean, there are always, you know, some kind of new tokens that are being born out, like, I don't know, social tokens, for example, for influencers or the like. You know, the NFT standard has been there for quite a while, but only has sort of risen to fame last year for digital arts and collectibles. But I need to say, I wonder, you know, what more innovation is there for the blockchain field as a whole. So not just thinking about tokens, but what could actually still come after that. Unfortunately, I also don't have really an answer for that, but my feeling says that there must be more to this technology than only the token, even though that's already a very significant development. But Christian, maybe you have some thoughts there as well.
Yeah. So the main thought of what we are seeing is definitely that there will be new token types that have additional attributes, like Astrid mentioned, the social element. You, for example, have now token variations on the Ethereum blockchain, for example, where you have like an NFT where you can also connect payment streams to it, or and design a token in a very special way that where you can more or less design a token as you want it and have attributes connected to it that makes it much more flexible in the interaction for the user and for the creator actually of the token. Yeah, so that's definitely something that's going to happen. Yeah.
That's very interesting. Can we stay a little bit with this term that you mentioned, NFT? I think the first time I heard it was 1 or 2 years ago when Gary Vaynerchuk promoted it on social media. And as far as I understood it, you can buy small pictures for a price that goes as high as $65 million. I think this was the work of Bibbers, where he sold his NFT at that price. And when I look up NFTs, I always see some funny apes or something that have a price of at best of a few €100, and also can go up to a few millions. And I always wonder myself, what can I do with that? I mean, it's a picture, it's on the internet. So what's behind this term NFT? Where do you see the use cases for it?
I mean, it's the first time that you can actually own a digital object. I think this is what people always misunderstand, because I always hear sort of the thing that, well, you can buy software, right? But no, you actually don't buy software and you don't own the software. You actually own a license to a software or a digital object. And sort of with NFTs, you can really pin down the ownership. And this is sort of the novelty. And it's also quite interesting what it creates in the legal space, because now you can sort of reuse digital content, sort of have sort of like secondhand JPEGs or whatever. And sort of it also means what really stands behind an NFT, and what kind of legal framework do you need to still create in order to make this really workable for people, because that I think there's still a lot of legal uncertainty what an NFT represents now in the real world, as opposed to sort of the crypto native people.
Maybe one more element from my side. So I mean, in general, anyone who is not very deep in the topic sees an NFT mostly as a picture or as an art object, which is like, as you've heard in some of the side comments from Astrid, which is not actually the case. It's a non-fungible token, and you can. It's actually much more than an entry gate to a picture. It can be an entry gate to almost everything, because it's really non-fungible. So it's only exists once. So it's like it could be an entry ticket, and it can have a lot of other elements as a something that is unique. And if you hold it, you get access, or you access not just to an digital object, but can be as well to concerts, to all sorts of stuff, to revenue streams, to it can entitle you to something. So it's actually a token variation, a special one, and we will see much more variations of this token variation of a non-fungible token, and many use cases. So the pictures were the first use case. Yeah.
And a rather funny one, I think. While you were speaking, I had the thought, can we go back to the old share system? I think before the internet appeared, shares or equity was basically printed paper. So could also a share be represented online as an NFT and being tradable then and being made unique? Is that possible?
So I mean, a share is not an NFT, because it's not. It's like money, you know. It's fungible, and I mean, like tokenized equity, we already see that, like tokenized ownership. Yeah. So fungible tokenized ownership is no problem. This will like be in the mass market pretty soon. Yeah. So that's not like an NFT, but like if it's connected to a special like piece or to special access or right, then we definitely will see NFTs. But yeah, tokenized equities or shares, it's not a deal. I think it's rather in this whole context of ownership of organizations and rights associated with it. It's actually the new revolution there is called the DAO revolution, I would say. So the decentralized autonomous organizations we are seeing, which is a whole new type of a whole new organization form and a whole new way of organizing, like fractional ownership and fractional participation, and which is really interesting and can revolutionize a lot, actually. Yeah.
You have a great overview of the market. What is your history with the crypto market? When was the first time that you got aware that there is something coming that has a potential to change our reality? How did you start, Christian, in the crypto asset market?
Yeah, I would let Astrid start because she started earlier with crypto. I mean, I'm also already 6 years in crypto digital assets, but Astrid even started earlier. So her story is even more fascinating, and then I will chip in.
Oh, good. No, I mean, for me, it really started almost 10 years ago when one of my friends and co-students at Oxford University suddenly changed his LinkedIn to saying like, Chief Operations Officer, something called Ethereum, and we're building this world computer. And I felt like, I mean, I was already heavy into innovation management at that time and looking into sort of alternative business models and new technologies. And I also asked him, so like, it sounds really cool, but I actually don't understand a little bit about it. Can you tell me more about it? And so over weeks and months, you know, we sat down for coffees, and he was explaining to me what blockchain means and where it could all go. And I thought it was really, really fascinating. It took a while. There's still another 2 or 3 years where I felt like, okay, now I feel really solid with this and I trust this. And this is not just what people say, like it's for criminals, which is totally misunderstood, because there is no more open system than a blockchain system. Actually, you can really track and trace everything there. But basically, that was really my starting grounds there, and I was very fortunate to sort of bump into Aaron, and also Gavin was a co-founder of an Oxford startup at the time. So this is sort of where I knew those 2 guys from, and it was sort of really fascinating when they then built together the team to then get Polkadot launched, and sort of seeing what was lacking maybe in Ethereum at the time and what could be improved and where the whole vision needs to go. And the rest is history. I was also advising a few projects in this space, which again, very, very interesting, mostly in the energy space. And yeah, and most recently before Smape, I was also head of research and managing partner of another blockchain focused fund, which was Scytale Ventures. But so this topic has followed me around for at least like 10 years. Yes. But Christian, over to you.
Yeah, so for me, it's, I mean, I'm a traditional finance guy, and I've been in a lot of banks, but at some point I was also advising insurtechs and fintechs on the startup range. And when you're like, I stumbled across Bitcoin and the other elements in 2015, so almost 7 years ago. And I was really fascinated and hooked by it right from the beginning, and I could not stop reading nonstop. And I never stopped. So once I started in 2015 to read up on it and go down this rabbit hole, I never stopped. I'm still reading every day and learning every day. It's this concept of Bitcoin and then Ethereum and what's to come and what's coming almost every day. This range of innovation is uncomparable. Yeah, and especially if you're coming from a traditional finance side, where you see all the limits and like all the regulation, and then you see something developed on the greenfield and where code is law. Yeah. This is just really fascinating and struck me, and yeah, I'm so happy to that I found this field. Yeah, this is fascinating, and maybe for myself, I then was also setting up the fintech advisory board of the Austrian Finance Ministry, and we there had a work stream around token classification back in 2017 when the first real hype started for the financial market authorities. And out of that, we spinned out the Digital Asset Association Austria, where I'm still a board member at. And next to Smape Capital, I also co-founded another entity in the space. So I'm also deeply rooted, in the space. So, and yeah, I mean, I'm a part-time GP in the fund. So we have 2 other full-time GPs next to Astrid. And currently, I moved as a CEO into an exchange, actually. Yeah, so I'm 100% now 150% in crypto and digital assets. Yeah, and I love it. It's awesome. Yeah.
Yeah, sounds like that. I mean, you mentioned that you have your fund, then you're on the board of what was the advisory board to the
the Digital Asset Association Austria,
yeah.
which is an NGO. Yeah, there I'm a board member still. Yeah,
and then
yeah.
you also at an exchange, and then you have another entity. How many hours does your day have? So
yeah, mostly 14 to 16. Yeah, so that's yeah.
I was thinking more about 48 hours. So how do you manage that many tasks? It must be
it's I mean, Astrid knows me already very well. I have to-do lists for everything, and I only go to sleep once the to-dos are done. So
Astrid,
that's my way.
Can you confirm that?
No, I need to say the whole team is always baffled how Christian really manages, but really with high quality and dedication. So it's very impressive. Yeah, excellent time management. Absolutely.
This is good to hear. I mean, it's very interesting how the space evolved. When I think back before 2014, it was more considered the area of the nerds and who needs Bitcoin for what is that? There were no use cases. 2017, I found also very interesting with the first hype that was not driven by the finance sector. I mean, it was always guessing that somebody on Wall Street or another area would start investing in that, but it were basically the grandmothers that wanted to buy something, a little bit exaggerated, that wanted to buy something for private people, so not professionals, wanted to buy something for their friends or for the family to build wealth. And it was, in my opinion, also mostly driven in the last years by influencers on the outset on YouTube, and not so much by traditional big funds that I expected more to be the first movers, like in other areas. How do you see that? How this hype evolved? What were the driving forces behind it?
So I mean, maybe I start, Astrid. So I mean, 27. I mean, around Bitcoin, you always had hypes. That's probably, you also had already the first hype in 2013, actually, and then again. For sure, the biggest first hype in 2017, where the biggest first mass, or let's call it not mass, but it was a retail hype evolving. But then we were still speaking about maximum 2 to 3%, of the retail masses jumping onto this hype bandwagon. But now that's probably there we know much more, and we can share this. Now we see really huge fund investments. Yeah, it's not like little smaller fund investments. We see funds compiling of the magnitude of billions, like single funds which are just like investing into blockchain and distributed ledger technology and token. So, and it's like really a massive industry. Almost all big fund managers jumped on the bandwagon, set up their own blockchain DLT funds. So this will be a massive development. It will enable a massive development for the scene for sure. Also, a lot of money will pour into probably not the best project, because there's just so much money out there now. So we will definitely see more bubbles coming. Yeah. So the bubble 2017, and to some extent the bubble we have seen now around NFTs and DeFi, there will be bubbles and bubbles over and again. But we also, if we remember ourselves about the early 2000 years, when there was the big bubble around the Web 2.0, yeah, how it's now called, yeah, also great things emerged out of this bubble. I mean, a lot of the projects vanished and are not there anymore. But this was this bubble, and the money pouring in was the start of everything we're speaking about now. Yeah. So yeah.
Astrid, what's your opinion?
Yeah, I think just as Christian said, I mean, I think these cycles have been going on ever since Bitcoin sort of was brought to life. But as I said, real innovation then came with Ethereum, where they also introduced this initial coin offerings. No one could have predicted, that what effect that would have had on the market. Obviously, went swiftly up, and then we entered the bear market quite soon thereafter. And since then, I think decentralized finance, which was sort of closer to maybe also what people can understand as a use case of this technology, really sort of brought the next wave of retail users also into the space, coupled with the follow-on hype with the NFTs that we saw in the beginning of 2021, where really a lot of institutions then also bought in. We also had Tesla buying into Bitcoin, and MicroStrategy buying in, and other investment managers, and that sort of gave first time in a long time also credibility to the technology, that you can really do something with it, that it's not just some nerds sitting around doing something on the computer, exchanging these kind of digital assets, tokens, whatever you want to call it, but there are real commercial applications, real new business models that are coming out of it. So I'm totally convinced that this is also here to stay. So even though we see now, market downturns and whatever, I mean, this is normal in tech development in any event. This, it will not vanish to zero.
Yeah, it's a quite remarkable development when I think of the first transaction for 10,000 Bitcoin a pizza, which basically was back then $45. And just imagining to owning 10,000 Bitcoin at 2010 prices, the uptake is quite impressive. And what surprised me was that the retail investors were front running and not the finance experts. And Astrid, you mentioned that now business models and use cases are coming more and more to the market. And Christian, also you said that the big funds are now moving in. It's a remarkable development from being something that you exchange for fun to getting pizza. And on the other side now in 2022, I think I read KPMG also starts putting Bitcoin into their balance sheet. It's really getting a professional touch now. You mentioned before, let's dig a little bit into the business models and use cases. You mentioned before the term token economy, tokenized economy. Can you explain a little bit more what that means?
So basically, when you have a decentralized network, you can share value by your participation in this network. And if the token utility, as we call it, is well set up and well thought through, you can also assume that actually the value accrual from this network, from the usage of this network, will also accrue to the token. And this is sort of something that stands out sort of from newer generations now of decentralized applications to earlier generations of decentralized applications, that people are aware of it, that only using, so just transacting on a network like Ethereum, for example, or any other big infrastructure will not lead to value accrual in the token as such. It's still the market that sort of derives the price. But with newer applications, this is now improving because now people are really putting sort of mechanisms in place that will lead to this or is leading to this value accrual. And this is also something that we're closely looking at in our fund due diligence, that we're not just investing into tokens that can be bypassed, that you don't really need in the network as such, or don't really need for the blockchain. You always need to think about that a token is always a financial incentive layer on top of a blockchain. A blockchain could run on its own perfectly fine, doesn't need a token. And if you introduce a token, it really needs to make sense and must have a certain utility.
That's quite interesting. What can we do in reality with this token economy? What applications do exist today that are remarkable?
Maybe Astrid, there's some topics with her headset. Maybe I jump in. I mean, they're like we for example at Smape, we are really looking at the token utility, as you said. So it's really important because there are rather a lot of useless token projects out there where the token has no actual use. Yeah, but there are like so many really great use cases. Speaking about, for example, decentralized autonomous organizations, it's a little bit comparable to a share. Yeah, you have voting rights. You can influence what actually the project is doing with the sheer amount of tokens you're holding. So also you have the voting rights. You're voting on chain, so it's also everything is very transparent. And so this is, for example, one really good token use case. Yeah, then with all sorts of utility tokens. And depending on, and that's the freedom, and that's the great thing about it. You can design it as you want. Yeah, you have, for example, token associated to platforms where the token gives you a discount, gives you also voting rights, gives you additional elements on the platform. The more tokens you're holding, the more like rights you're having, more participation rights. So those are definitely very interesting utilities of a token. And Astrid, I'm not sure if your headset is working again, or maybe you can add here as well to token use cases.
No, totally. I mean, also, again, as you mentioned, a sort of decentralized autonomous organizations part, the governance there is also very interesting to see, how people really implement governance, how they incentivize governance as well, because that's also sort of a problem that we have in this space not just in this space. If we have, any kind of political votes out there, we know what the voter turnout is, and that's actually in Web3 infrastructure is actually even worse. In single digit percentage numbers. So there are now more and more efforts also to sort of incentivize governance and how we could do that. In terms of business models, I mean, we could also think, for example, the whole topic of the machine economy, where then suddenly machines can also transact for themselves and become self-sustainable business models. So that, excess energy, for example, can be traded across parties. So there's a lot of things that this technology can now bring to us and how you can actually use tokens. And as you mentioned also before, for example, there are also, for example, NFTs where you could give certain rights to it, get sort of a participation right in, for example, again, a machine, an object or real estate object, for example, then get sort of it's sort of something like a dividend for that. So there are certain models that you can employ with this technology, and a lot of sort of use cases that we also haven't heard of yet. Yeah.
Maybe the most prominent, Christian, one more thing, the most prominent use case, I mean, it's obvious, but maybe some of our listeners are not aware of that. So the most prominent use case is the transaction fee. So if you're in the token ecosystem of the token, you're paying with the token, the transaction normally. And I mean, we have seen it with these huge gas fees, with the overload of the really huge interest and the applications building on the Ethereum network. The transaction fees and the usage of Ethereum is increasing massively, and that's on the one hand the usage of the token, and on the other hand it's also growing of the network importance and value accrual of the token in that respect. And I mean that's like that's a network effect and value accrual. It's a very interesting element of all over. Yeah.
In to add to what you said, in the last years, what I found remarkable is that, especially in the last 2 years with the pandemic, that more and more retail investors, how should I call it, start investing or gambling on the stock market and trying to find ways to invest their capital. And I think one problem always was for people who start out with zero net worth into their lives and don't inherit anything, that investing in equity and also investing in any other asset classes was rather expensive. I just think about real estate, you need a little bit of money already, and also buying equity. Amazon, it's 2,500, and I will think back, students who don't have any money can't afford such an asset. Is there any possibility to use tokens or this token economy to help retail investors getting access to more asset classes?
Yeah, maybe I start, because I think this is really one of the most important elements actually of blockchain in general. It's the accessibility to everyone. So everyone has more or less the same accessibility to the market. With traditional capital markets, as you know, the accessibility is sometimes very limited. Sometimes from emerging market countries, they can't invest easily into traditional equity markets, just simply because brokers and marketplaces are missing. And that's something that's fundamentally changing with decentralized finance and applications on the blockchain, because anyone who gets the seed phrase or gets a wallet and has an internet connection, actually can interact with blockchains, transact, and sometimes for really, really, really low fees. Yeah. And what we are seeing, and that comes then to your question is, and we also invested in one of those protocols, is that we see a lot of synthetic assets. So assets that get copied, or the development gets copied, and then that enables, for example, someone from Bangladesh or from African countries to easily invest as well into traditional equities, or into following them, or following the value accrual of those equities, without having the need to have access to a proper broker or marketplace. So that's definitely happening, and there's a huge merge of traditional equity markets and digital assets happening over the next couple of years. This is definitely just the beginning where we are right now.
Yeah, maybe just to add on that, it's still, people should be aware of that it is still a high risk class, and that you should really, you need some technical sophistication also to understand what you're actually investing here, so that you're not just on sort of the mercy of influencers who build their own kind of narrative around the coin and might just push it up for, not much utility or not much use, or not much value otherwise behind. So I think this is something, it's something that also resounds, I think, in the traditional markets. Do your own research, and that is really, really crucial and really important, that don't invest into something or an asset class that you do not understand.
Very interesting point in that I am a huge fan of the capitalist meritocracy. So it basically, to me, it means people who put in the work get something out of that. And it works very well in several countries in the world. And it's great to motivate people to move forward, to learn new things, to acquire new skills, and to do something of value to society. But it needs one precondition. It needs basically a bank account. I mean, when you want to transact these days, you need a credit card, you need a bank account, and then you can start a business and put a price tag on something and collect money. And I thought until 2021 that this problem of having a bank account is solved in the entire world. And I was very surprised last year when I came across the Unbanked podcast, where I thought, better do they name this podcast the Unbanked podcast, and started researching and found out that globally about 1.7 billion adults remain unbanked and don't have access to a banking system. So leaving these people out of the capitalist world means that they cannot benefit of that. How can blockchain solutions be of value here?
Well, basically, anyone who has also an internet connection can actually set up a wallet and then start, filling that up with the assets that he or she wants to have. I think what also stands out is that if you have your own wallet, so if you don't keep it on a centralized exchange, you actually have your own keys and you're the owner of your assets, and actually no one can take it away unless, hacks and all that, that happens in every system. But in principle, there's no single party that can say like, oh, we're going to freeze now your account, which has happened in the past quite a number of times, where people were standing in front of ATMs trying to withdraw their cash and were not able to do so. And this is sort of one of the nice things about blockchain and sort of these digital assets, that you are really in control, you are in charge. I mean, it sounds maybe a little bit frightening at the beginning, that sort of you have your own responsibility, but once you go down actually this path, you can see that how many advantages it actually brings to you also as a user in any circumstances in your life.
Yeah, and imagine being from Venezuela and you wanted to, or you wanted to get out of the country for economical reasons or political reasons, like 2-3 years ago, they were taking your gold you had with you at the border. And we've seen like gold grabbing all over the time in the history, as well in the United States, for example. Yeah, and that's just some really valuable element of this technology, that you can take it everywhere, as Astrid said, and at the border they can't take it from you. You can put in your seed phrase again somewhere else and have access to your funds. That's really beautiful. Yeah.
I absolutely believe that, especially these days. I think we see that investments in real estate are not safe. And you have a problem, you can't take an apartment with you if someone wants to. Normal use cases. I mean, I have entrepreneurs here in Austria who want to build their company in San Francisco because there are more investors there. When they want to move all the assets to San Francisco, they have to sell first everything, put it in a bank account, and then start from scratch over there. If Bitcoin and other cryptocurrencies have a tendency to be relatively stable compared to the inflation rate, for example, in their value, then it's pretty easy. You put all your money in a wallet and then you can move around everywhere in the world. And looking at countries, you mentioned Venezuela, and I think also Romania and other countries had hyperinflation. So these price fluctuations also in cryptocurrency are relatively harmless when I compare it to the inflation rates in countries like Venezuela. How do you see it, Christian?
I mean, that was a picture perfect example. If you look at the adoption rates actually of digital assets, cryptocurrency, you saw, for example, in Turkey a huge uptick during the hyperinflation, and also in a lot of other countries, Argentina and you name them. Yeah, you see huge adoption also in a lot of African countries. A lot of startups are rising out of that. I mean, it's not just like safe money transfer and value conservation. It's also remittance, for those countries, for a lot of like emerging development countries, because it's still very much cheaper than using Western Union or other providers, and they take a big chunk of what you're transferring already, and it takes a lot of time, and it is also associated with risks. I mean, nothing is without risk. Also, crypto transfers are with risk, but it's at least much cheaper and peer-to-peer. So brings a lot of positive aspects as well to it. But yeah, we also there we see a merge happening. Like also the classical remittance companies, they're jumping on the bandwagon and are using this technology, and in the end it also brings down the costs of classical remittance a lot. So so the technology is on the one hand as a whole very positive, and on the other hand also drives innovation in classical industries.
Let's not forget that also we've got stable coins as well in the ecosystem. So it's not just sort of the high volatility kind of risk asset that we see and the tokens associated with that, but we also do have stable coins. Never mind, they're getting grilled by regulators these days, and we will see how that will actually pan out. But in general, this is also part of this technology, that not everything has to be as volatile as Bitcoin or other assets as well.
Yeah, when I remember my days in merchant acquisition at larger corporations or listed corporations, transferring money was really expensive and a process. So 20 years ago or 30 years ago, it took a lot of time and effort and parties in between. And I think with this token economy, you have a chance to make it easier. I was not aware until I read the report from Cathie Wood that this remittance network plays a major role. Can you explain a little bit more, Christian and Astrid, what is behind that? You mentioned it already, but can we dig a little bit deeper why there is such a huge opportunity there?
Yes, because it takes seconds and doesn't cost money. I mean, you said the pain of transferring money is almost gone in traditional systems. It's not. So when I transfer US dollars to the United States, it costs a huge amount of money still, and takes 5-6 days, if not more.
Sorry to interrupt. Do you know what the price is currently for transactions via the traditional banking system?
It's so last time I'm doing regularly quite large transactions, and we from Smape also did a couple of larger transactions. It's definitely in the almost in the percentage range. So of and with a pretty high base fee, you know. So at some point it's 0.5% to transform from the transferred value, which is really a lot. I remember, it's really a lot, and it takes a lot of time, you know, lot of like intermediate, 5 to 6 days. I mean, and with stablecoin, as Astrid mentioned, you can have this within seconds, and it's transparent. You see if and when it has arrived, and you can see where it goes afterwards. So So I said you are the one in charge with, for example, with transferring a stablecoin. You are signing it. I mean, you're also signing it on the bank account with your code and stuff like that. But you don't see where it goes and how it goes. And on the blockchain, you see every detail. When it arrived, you can. I mean, seconds later, you can ping your contact on the Telegram chat and say, okay, hey, the funds arrived. Can you confirm? Yeah, yes. And you're sending them the Ether scan, so the more or less where you see the whole transaction and say, yeah, look, there you go, it's there on your wallet. Can you confirm? I mean, I can anyway see that it's there, but can you confirm? That's just a revolution, and all those things associated with like with money laundering and stuff like that. That's always over and over again. It's revised. You know, you saw this big where they tried to money launder a couple of billions recently. It was, and they tried to go via privacy coins, via Monero, but it was all revealed, you know. So it's so difficult. It's much more difficult to launder money on the blockchain than with the traditional system. Yeah. So it's really difficult, and all the centralized players in the digital asset blockchain scene, they have the same requirements from a KYC and AML perspective than traditional players. I mean, onboarding on an exchange now, on a centralized exchange, takes longer and is than with a bank. Yeah, so or at least the same time. So it's very safe, and so it's almost impossible to launder money on the blockchain. Yeah.
This was also a thought I had while you were speaking, that these money laundering regulations that we have in Europe, that the blockchain must be actually a good thing, because there's always a question when I collect money as a company, where does it come from? And when everything is recorded on the blockchain and they can trace it back, where does the counterparty got the money from? And they can explain it clearly with showing the data around the blockchain where it comes from, and that it's from a, let's call it, safe source. Then it must also be great for drawing up the balance sheet at the end and for any audit. Do you see that similar?
Yes, and it's also, you know, once a wallet or a coin interacted with something fraudulent, it can be tainted. So it can be like you can make a mark on it, yeah. Mm-hmm. And if you, for example, try to onboard a tainted Bitcoin with or send it to a centralized exchange account, the exchanges don't accept it anymore. There's software. Every big exchange now has software that's detecting wallets and transactions that come from wallets or accounts that ever interacted with any kind of malicious, fraudulent actions. And so it's really, really, really hard. And from an accounting perspective, you're also completely right. Yeah, I mean, there's software now. You just like interact with APIs. So you connect your APIs from your wallets and from the exchanges and your wallet address with software solutions, and it extracts everything and puts out a report anytime about your transactions, your potential tax burden, and so on and so forth. So this all yeah, it's actually, blockchain is also a dream for Secret Service and stuff like that, because everything is fully transparent. Once you know, like, to whom a wallet concerns, to whom then it's very easy to, it's like a it's very easy. So once someone knows your wallet address, they can also track you and see what you what and how and when you're transferring what to which other wallet.
Yeah, but also, as you mentioned, I mean, these kind of tainted coins, once they hit sort of also centralized exchange, they have the power to actually freeze those assets and potentially also return it to the original wallet holder, no matter if you know the identity or not, but that's a good thing. And for example, also recently was in the media that even through sophisticated methods, a journalist in the US actually was able to sort of follow the traces of one of the major hacks that happened very early on in the Ethereum history, the DAO hack, where, again, huge sums of money were sort of drained out of the initial DAO made up by the Jens brothers of Slockit. And she was able to sort of follow the trace and propose an individual that may have really carried out this attack. So you can see even years and years and years later, you can still follow the trace through the blockchain system, which is actually quite powerful. It also has dangers. I can also speak about that, but obviously, so for mass surveillance and all that, it's also really a good tool, so to say, unfortunately. But there are also very good aspects about it.
Looking at it from the accounting perspective, I think it's one of the greatest things ever, because you can be 100% transparent in any transaction. And I think this is was always, when it comes to accounting, one of the problems that people tried to solve. And as far as I understand your explanations, now with the blockchain technology, we have it for the first time that we really can put that to work. I like the conversation, because when I asked questions in 2017 about potential use cases, I didn't get any answers. And now when we are talking about how can we use blockchain technology, how can we use the tokens, there are so many potential use cases out there that really help to improve things in the world. I would like to switch to the next buzzword that I read lately on the internet, and I think Mark Zuckerberg was one of those people who pushed the term Metaverse. In the last couple of months, he also renamed Facebook to Meta. And lately I saw on YouTube influencers who discussed how Microsoft will push Facebook and Meta out of the Metaverse because they have the much better technology. Can you explain or give some details to the role digital assets play in the Metaverse and what the Metaverse is all about?
I mean, the Metaverse as such is not a very new concept. It actually also doesn't come from blockchain. So it's actually something that comes from the augmented reality, virtual reality, mixed reality kind of world. So it's been a concept that has been renamed over the years a few times, but it's actually nothing new and not as I said, something that came out of blockchain. What blockchain can add to these digital worlds, though, is that it can, for example, make items that you see there, so like digital fashion, you know, or again, any kind of gamification elements. It can make these things so that you can really own them, that you can transfer the value, and also across different ecosystems, depending again what kind of chain you're using there and how it's set up. But basically, this is sort of where one of the applications of NFTs really strikes, because suddenly fashion designers can enter these kind of virtual worlds, can sell fashion. You can also have new business models like where to earn. So you can sort of wear these digital garments and can get paid for being like for advertising there. So you can see that it has sort of enriched the whole AR, VR, XR communities and the display. And this is certainly an area that I'm very much interested in and find it very exciting where this will actually still go in the next years, and how we sort of will reinvent ourselves also in the whole discussion of digitalization and going deeper and deeper into these virtual worlds.
I can see this topic coming. I mean, for the gaming industry, it must be a blessing. Just thinking back to the 90s when the internet arrived, I think the first things that went online were shooter and also online role-playing games. And people always laughed, those people who like to play games, always laughed to personalize their avatar so that it really looks unique to them. And the problem with that was you invest a lot of money, buy basically collectibles that don't have any value. When I just think about the trading card game Magic, which is also, I think it started 2000, which also put an online version on that. And I loved playing this game about 12, 13, 14 years ago. The problem also there was whenever I bought cards online, I mean, they did cost money, similar to the real world version, but I couldn't exchange them and they were basically not unique. And now, as far as I understand your explanations, Astrid and Christian, that the NFTs really have the first time the possibility to make every single digital item unique and transferable. Is that the right understanding that I got?
No, totally. I mean, and again, there's so many other applications that can out of it. So, for example, in gaming, as we rightly say, I mean, the nice thing about NFTs is that you can lend them out, for example. So you don't need to sort of spend, I don't know, credible sums of money on an item that you would only use once in a game, but you can actually go to someone who would lend that to you for a much cheaper price. You just use it once, it's gone over, and then the person gets it back. And that's sort of a nice win-win situation for both sides. But it's also taking it to next level. For example, there was just recently also an sale of Dogami, which sort of has virtual pets, so virtual dogs basically, and you can also breed them. They will have certain traits and characters, and depending on how you treat it, like again a Tamagotchi, but that's one that you can actually then sort of transfer between people and sort of give it your own kind of special attention, and sort of this is what NFTs also make possible. So it's really exciting to see what will happen in the next few months in that space as well.
Yeah, one comment from myself to that. I also think the metaverse, as Astrid said, was already there beforehand, but now, and maybe that's the real metaverse definition, we see like everything merging together in the virtual world, value transfer, gaming, applications, and when all comes together, like we will, I'm a bit, actually, that's the one thing I'm not sure if I'm so comfortable with, that we will probably, like we are now in video conferences, we will delve ourselves into only or in more and more in virtual worlds, and I'm not sure how this will change us as a society. But yeah, let's see. I mean, it's despite of that, that's very exciting. Also from a business model perspective, opens so many new things we can't imagine right now that will come to life as a business model. I'm so sure about that. Yeah. And we will see so many business models we can't imagine right now.
Looking at today's world, I think the metaverse will be relatively harmless, or these digital worlds. Also, when I look back in the 90s, I mean, as you said, it was already there in the gaming industry. So EverQuest was one of those games where people needed to collaborate at scale to solve problems, in-game problems, and it helped, I think, also evolving this headset industries, microphone industry. So we had TeamSpeak back then to work together, and collaborating in such an online game meant that you have to coordinate at least 60 to 100 people to achieve one goal. And from your explanations, Astrid, what I got is that the reward when a larger group of people solved a problem in a game was basically in-game items that were unique and only one player could take it. And the problem with that was that to solve the next riddle or the next problem, you needed stuff from previous problems. and they were not transferable. And now with NFTs, I mean, you can lend them out. It's paradise basically, because gamers can really start creating an economy in-game in such games and basically make money with that, which is not a bad thing in my opinion. How do you see it, Astrid and Christian?
Yeah, absolutely, totally. I mean, it's certainly something that enriched the gaming landscape, as also the NFTs, and I think we'll see more and more of these. So there are also now more sort of AAA plus titles being built that will come out in the next years that will be even more sophisticated than sort of the basic kind of games that we see today. But yeah, there's a lot of opportunity there.
The thing with opportunities is always usually they need money to evolve, and I see it in the life science industry. I'm now in the life science industry since 2006. That money was always scarce, and there were so many ideas to move things forward. But without capital, it's basically impossible. How do you see in 2022 the investment landscape in all kinds of digital assets, private and publicly? How did that evolve, and what is the future of that?
Yeah, maybe I start. I mean, we already stressed it a bit beforehand. I mean, this developed so significantly over the last 2 to 3 years, especially. And we see a lot of institutional players, like, for example, Sequoia and others, building their own blockchain, distributed ledger investment teams, as well on the equity as on the token side. And just a lot of know-how is being built up within like investment firms, especially on the venture capital side. Yeah, you see, because it's still very risky to invest into very early projects and protocols teams. But there's so much like know-how is being built, so many people are pouring in, and that's all. And that's why so many ideas are happening, and that's why, yeah. And ideas and great people, great ideas, great tech, that's attracting money, because they are, at least on paper, starting to sketch very interesting business models, and interesting business models attracts a lot of money. And yes, that's why we see really, I mean, we get those reports on a weekly basis, how much money is being raised by VCs, and we are definitely on the smaller end with our 20 to 30 million we are raising. There are funds raising in the billion figures, you know, like, and who is investing in those funds? Big private equity firms, big financial companies, pension funds and stuff like that. So actually almost the entire like value investment cycle is now somehow starting to invest, or is invested into funds or companies investing into digital assets and the digital asset ecosystem, a blockchain ecosystem. So that's definitely happening, and this will, I think, only grow much more from now onwards. But it definitely has arrived. It's being more and more institutionalized.
That's good to hear. You mentioned that Sequoia is moving into that space, and I think the last fund that Sequoia closed was 9 billion or something a couple of months ago. And Anthony Pompliano, is one of the influencers on YouTube, mentioned that also BlackRock, he titled this episode, BlackRock wants to own all Bitcoin in the world, that they're moving in. I just wondered, you said that you're raising a next fund. Is there still room for other funds in that space, or is it already crowded?
Yeah, there's definitely room. You just need to find the niche and the sweet spot. And Astrid already mentioned that our sweet spot is in the pre-seed seed space, and yeah, we have a USP that not many funds bring to the table. We are very strong on the legal and regulatory end, and with the entire team we are having, we also have a really good understanding of token utility, because we are all so long in the space. And tokenomics, we have a very large network, and are hands-on at the beginning with early projects. And yeah, there's for sure space exactly for funds like us. Yeah, there are for sure copycats out there, and probably not doing proper due diligence and throwing money to projects without doing it properly. But yeah, for funds like us, there's definitely a good room, and we are very confident that yes, we will be able to deploy our capital wisely and in a very good way, and find exactly those projects that are in our sweet spot range and that will add a lot of value to our investors. Yeah.
Astrid, you wanted to say something? Astrid, you're on mute.
My internet connection broke down. I had to switch to mobile again. Sorry.
Astrid, do you want to say something?
So the last question I got before dropping out for internet reasons was about, is there more room for funds like ours or others? And definitely, I mean, we're still quite early, in the adoption curve also. Totally, and the more the better. We're also collaborating in a very friendly way with most tier 1 and tier 2 type funds. And we're also trying to get this technology to a level where everyone will have access and where it also works in a way that the whole Web3 was envisioned. So absolutely, but also as Christian said, I think for someone who would like to invest into a fund, you also need to, again, do your own research and see, okay, what is the capability of the teams? What is the USP? What are the entry points? What kind of social networks do they bring along? And how good is their technical understanding, especially when it comes to token utility, token economics, because we're still so early that you need a lot of expertise in assessing these types compared to, any kind of other standard venture.
You mentioned that you raised 20 million. Did I hear that correctly, Christian?
Yes, that's the target. So we are currently in the midst of our fundraise, and we have now commitments for 10 million plus. So we still have room, but yeah, we already in a stage where we are. Once we finalized everything, where we would be allowed to do a first closing already now. But for our fund, the first closing will most likely happen between mid and end of April, probably early May. So that's the time frame we still can accept investors for the first closing, and then we probably do a second closing later this year. Yeah.
Let me ask you one critical question. With 10 million open, I think you also address not only institutional investors, but also private investors, business angels, high net worth individuals, family offices that basically could invest. So you're not raising 100 billion or something, which narrows down the market. So you leave the market open for you. And I can imagine that someone out there listened to Anthony Pompliano on YouTube and saw these mesmerizing returns that Bitcoin created. And in the last 10 years, with, I think, millions of percentage return in a couple of years, and also probably read Cathie Wood's report that states that Bitcoin has still room to grow, and might come up with the question, why should I invest in a fund when I just need to buy Bitcoin? It's so easy these days. What is the advantage of investing in you?
On the one hand, you only get into pre-seed, seed stage deals these days if you are actually an entity and can present yourself with a solid USP. So it's not like that you just wave with money around and, people just take it up. Because again, there is so much money on the table these days that projects are also very much looking for a value add in an investor. And there, luckily, where, as Christian said, we have a quite unique USP where I think maybe just one other fund is working on a similar kind of angle. But also, if you consider the kind of valuations that you get in pre-seed, seed stage rounds, they're actually at the fraction of the listing price that you get. I mean, no matter what, you can get good returns also by going to listed assets. And it's always good to, maybe combine these strategies. But in general, if there is really a downturn in the market, then from experience, it is very rare that you would hit prices below those pre-seed, seed stages. It can happen for various reasons also when, projects make wrong decisions in strategy. And this is something that we're also trying to help with, sort of connecting them to the right market makers and so forth. So that is also sort of in a safe and sound way. but there are many sort of advantages for actually going into a fund that has access to these very early stage rounds.
I absolutely believe that. I also see it in the life science industry. Whenever I have an opportunity that I think is interesting, the first calls are always to venture capitalists or to funds, because I know that they also have the right network to help moving the assets forward. And I'm very selective with that. And I'm pretty sure that in your area, it's pretty much the same, that interesting objects, interesting ideas, teams that are proficient in developing certain ideas, first call funds in their space and see if they can get a deal closed and then go to other people. So this is a good reason to invest in you. And coming from that angle, what is the focus of Smape Capital? What is your core expertise of the team? What are you looking at in terms of areas in the industry beyond pre-seed and seed stage?
So basically the expertise in the team is, as we said before, is very heavy also on the legal and regulatory side. We've got 2 advisors that are very well known in the crypto and regulatory and VC space in Germany, as well as a full-time GP that's still in stealth for a month or so, that works on legal and regulatory matters, and that also sort of feeds into our own due diligence, that we can make sure that we only invest into business models or protocols that are regulatory sound at the stage of investing, and considering all, you know, the kind of intel that we get from our network would also last for the next years. And sort of we're also very strong on the token utility aspect, as we said. So really looking at where is the value accrual in the system. Is it really just purely a speculative token, and we will likely pass? If it's a really good token that shows value accrual through the usage of the network and the utility, then this is something we will invest in. But other than that, we're very broad on sectors. So we said that in terms of DeFi, you know, we've had the hype. We have already a lot of platforms out there that are sort of winning. It's really difficult to find new you know, like a significant innovation in this space. We have done some investments in this space, but it certainly will not be a huge focus of the fund. In the NFT space, we will not invest in NFTs per se, but in platforms that will actually build on new functionalities and will allow for new sectors to come up in that space. So this is something that we're certainly looking at, so digital fashion, digital lifestyle, the whole metaverse topic, fractionalized ownership, also in terms of IP management, for example, so intellectual property management, I mean, with that. We also have a lot of you know, interesting opportunities around data and AI when it comes to, for example, healthcare, decentralized science, also protocols interacting with hardware or IoT devices. So we will not invest in hardware per se, because it's very capital intensive and will take a long time until it's actually out there and certified and meets those requirements. Because we also have a short lifetime of the fund, it's 5+1+1. So we need to make sure that also the value accrual will actually happen in that time frame to make sense. And yeah, as also mentioned before, there's a lot of supporting infrastructure that we still need to invest in, bridges that work for interoperability between those kind of platforms. Distributed data storage, for example, is also still a topic that hasn't been solved too well. There are some interesting infrastructures, but I think there's room for more. So, and all sorts of interesting new, sort of say, like consumer-facing applications. It's also a topic for us to get really also more Web2 users into Web3. And there we're also, again, very critical also on the token utility side.
We're coming to the last part of the Inquisition. So when you met, Christian, you mentioned before the bubbles that happen sometimes on the stock market. And when I read through the internet, I always see one story flow. So there's a bubble, and then coming people who remind other people that the bubble at one point in time will burst, and then it's all over. Everything is gone, and the market is dead and nothing happens anymore. In your opinion, Christian and Astrid, what is the future of investments in digital assets? Is there still room to grow, or with the latest burst or microburst of the bubble, is it all over now?
Yeah, I mean, yeah, you're completely right. It's then much quicker all over than before, and a lot of people are getting then desperate pretty soon. It's the same on the stock market. But if you're long in, as long as we are in the game, there it's still. So we are very used to this narrative that has been in cycles coming over and over again. So, and to your question, I think there's so much room to grow. So it's not like, yes, it will grow. It will grow massively. Like, I think the whole digital asset ecosystem will do a couple of hundred multiples, I'm pretty sure, over the next decade. So this is not like, will it grow? It will definitely grow. There is no, I mean, but the next cycle that is fed, that is being fed right now, will be much bigger than the last or the most recent hype cycle, because millions of projects are building now, fed by a lot of money, and this will be exponential. Yeah, the next growth cycle of blockchain digital asset, of the digital asset space. Yeah, and we can't even imagine. I think the prediction, I'm a little bit shy on predicting values, but we'll definitely see huge value accruals. And I also think that, I mean, Bitcoin is the first asset and a store of value, but we will see big value accruals with a lot of protocols and much more interaction and new technology emerging. So we touched the surface, I think, from what's possible with Web3 applications. So there's really a lot of room to grow.
Yeah, I need to say it, just also chipping, I think it's also often, so when I hear the discussions of Bitcoin is just falling in the same way like the stock market, and actually very much coupled to same sentiments and all that, I think it's also a misunderstanding of what tokens actually represent, and also comes back to what I said quite at the beginning of the podcast, that there are sort of these kind of earlier kind of projects and tokens that have brought to life, where, you know, it was, you can easily launch a token over the weekend if you wanted to in ERC20, it's not a big deal. But to really find a mechanism that it actually has a value accrual in a tokenized economy is something very different. And this is something that we're seeing now with the next wave really of developers and teams coming on that are now really questioning themselves, so how can we actually marry these two topics? And so I totally believe that in the future, it will not be in a year or two, just setting the expectations right. But it is that these newer approaches of token economies and how they are being built will actually be much more stable than what we see on the traditional markets, because they will represent, you know, a participation in a network, and they will represent the value of that network, and will not be that much, let's say, prone to outside events that you have. So try to think of those tokens as sort of separate sets of, I don't know, access rights to a tokenized ecosystem that you can use then, for example, for your energy trading, for going shopping for groceries or whatnot else, you know. So the dynamics of that will fundamentally change, and this is something I think that people are still not considering well enough these days of what it actually represents long term.
Plus, one more thing, it's not just the sheer amount of money that's now being invested, it's also the sheer amount of know-how and like people, like really smart people moving into the Web3 space, and like merging Web3 more and more with traditional business models and with traditional players. That's just something that will also drive the adoption curve massively. And as they said, also with our investment focus, consumer applications, there will be more and more, and it will be easier and easier to interact with Web3. And yeah, this will drive the next huge wave of adoption and of business models. And yeah, this is I'm sure we can't imagine how big this will be. And but also again, you know, it will be at one point it will be hard to differentiate. Is it now Web3 where I am, like, or is it Web2? Am I in the Metaverse? Or so I think you can't say at one point in 5 to 10 years, okay, is it now the digital asset world growing, or is it the Metaverse world ecosystem growing? So I think this will merge to some extent, and yeah, all will grow together. But the aspect of the digital and the token economy will definitely be a core pillar of what's to come. Yeah,
I agree to that. I'm coming from the financial world also, and in Cathie Wood's report, she made an attempt with her team to estimate the growth potential, and I find it quite intriguing. She says that, when I remember it right, on CoinMarketCap, the current value of all tokens is about $1 to $2 trillion. And in the report, she shows that gold, for example, has a 10 trillion market capitalization, global equities above 100 trillion. Then she also puts in the graphic global M2 with 123 trillion, or global bonds similar size, or global real estate 220 trillion, which I think from the dynamic that you described in the token market, it gives a little bit of outlook what is still possible, what growth potential can happen over the coming years, from 1 to 2 trillion up to probably, when we compare it with real estates, 220 trillion. So money is flowing into that. And the government's also made sure in the last 2 years that enough capital is flowing through the economy currently. Astrid, Christian, did I miss any questions that you would like me to ask at the end of the podcast?
From my
Sounds
point of
all
view,
good to me.
Yeah, it was a really interesting conversation, and I hope you, your listeners will also like it. I think everyone who's interested to go down this rabbit hole will never come out again of it. And I have seen this with so many people. When you once started to read up and actually practice and dig into the technology as well, then it's hard to go back or get out of it again.
That's true.
It's really, yeah. I mean, we spoke a lot about the whole ecosystem, and I mean, you anyway will have our names displayed. So if you're interested to know more about us and our fund, just reach out to us, and we can have bilateral talks as well about it.
Yeah, we also have a very good blog actually that we're also trying to cover with some thought leadership piece and educational materials. So most recent, we actually published also together with one of our technical advisors an article on an attempt to build a framework to assess these DAOs, these decentralized autonomous organizations, taking about 21 factors into place. So we will build some more articles around that and really try to propose a kind of valuation and assessment framework for that as well. So also follow us there and have read through it, and always we always welcome feedback, obviously.
I'm at the end with my questions. Astrid, Christian, thank you very much for your time. And I wish you all the best for your future. And I believe you will contribute in a great way to the token economy. Have a great day.
Thank you very much.